All right, let's just jump right in. We are tackling a topic that is always buzzing, a world of incredible highs and, let's be honest, some devastating lows, day trading Bitcoin. This is one of our most requested explainers, so you know what? Let's get to it.
So this is the real question, isn't it? I mean, you look at those price charts, you see Bitcoin just rocketing up 1 minute and then plummeting the next, and you can't help but wonder, is there a way to actually ride that wave? Can you harness that wild energy and turn it into profit? Or is it just a recipe for disaster? And trust me, the chaos is very, very real. Just look at this number, 15%. Bitcoin's price can swing that much, sometimes way more, in a single day. Think about that. It's a high-stakes game where fortunes can be made, yes, but they can be lost in the blink of an eye. Okay, so let's start right there with the heart of it all. Section 1, the Bitcoin roller coaster. Because here's the thing, before you can even think about trading it, you have to truly respect the wild, volatile beast you're dealing with. You know, the best way I can describe it is like looking at a heart rate monitor during a sprint. It is just a constant series of these super sharp peaks and deep valleys. This is not some gentle, sloping hill, okay? It's a jagged mountain range. And that very thing, that volatility that scares most long-term investors away, well, that's the exact playground where day traders hope to find their edge. So, if that's the chaos, how in the world do people try to tame it? Well, that's what we're going to dig into in our second section, Harnessing the Volatility. And we'll start by getting a super clear idea of what day trading actually is. And here it is. The whole idea really boils down to one thing: speed. You are not buying Bitcoin hoping it'll be worth more next year. Nope. You're in a trade and you're out of it within hours, maybe even minutes. The goal is to just grab these small little wins from the constant up and down movement all day long.
And what's so fascinating is just how different this is from what most of us think of as investing, or hodling, as they call it in the crypto world. See, investing is a marathon. It's all about patience, being passive, and focusing on the big picture. Day trading, it's a dead sprint. It's active, it's intense, and it's all about what the price is doing right now. They're basically two completely different sports played on the same field.
So if it's a sprint, you better have a game plan, right? And that brings us to section 3, the day trader's playbook. Because the people who succeed at this aren't just getting lucky. They have a disciplined plan, a playbook, and they follow it to the letter. And this right here is the skeleton of any good trade. It all starts with a why, a thesis. Then you pick your exact entry point. But, and this is absolutely crucial, before you even think about clicking buy, you have to know your 2 exits, where you'll take your profit and, just as important, your stop loss. That's the price where you admit you were wrong and get out to protect your money. You need a plan for winning, and you absolutely need a plan for losing. And that playbook can look a few different ways. For instance, you've got scalpers. These guys thrive on pure adrenaline, making hundreds of tiny trades a day. Then there are range traders, who are more patient. They're playing the predictable bounce between a known high and a known low. Breakout traders wait for that big, explosive move, jumping in right as the price smashes through an important level. And news traders? They try to be the fastest person on the draw, reacting to big headlines. Okay, we've talked about the how. Now we need to talk about what is, without a doubt, the most important part of this whole thing. Section 4, surviving the swings. This is all about the cold, hard reality of risk and the ironclad discipline you have to have. Let this number sink in for a second. This is a sobering dose of reality. Study after study suggests that a huge majority of people who try to day trade, maybe as high as 90%, end up losing money. This is an incredibly competitive zero-sum game. This is not a casual hobby you just pick up. And this classic quote from Buffett really gets to the heart of why so many people fail. The market is an emotional battlefield. Greed tells you to hold on too long. Fear tells you to sell too early. Impatience is your worst enemy. Day trading really is less of a battle against the market and more of a battle against your own gut instincts. Emotional control is everything. Which brings us to the most important point. The single most important strategy you can have isn't about picking winners. It's about managing your losers. Seriously, your number one job as a trader is not to make a profit. It is to protect the money you already have. That's called risk management, and it's the whole game. This chart shows you the golden rule of risk management perfectly. It's called the 1% rule, and it's so simple. You never, ever risk more than 1% of your entire trading account on one single trade. Why? because this rule ensures that a bad streak of losses, which will happen, doesn't completely wipe you out. It's the one thing that keeps you in the game long enough to actually learn and get better. So we've walked through the playbook and the psychology behind it all. Let's pull everything together in our final section here and figure out the ultimate takeaway from this high-stakes game. If you only remember one thing from this whole explainer, please let it be this. Nobody, and I mean nobody, can predict what Bitcoin is going to do in the next 5 minutes. It's impossible. So successful trading isn't about having a crystal ball. It's about having a system that over hundreds of trades gives you a slight edge, a better probability of being right than wrong, and then managing your risk every single time.
And that really leaves us with the final question you have to ask yourself. When you strip away all the noise, is this a disciplined strategy based on statistics and risk management, or is it just a high-stakes trip to the casino? The truth is, the line between those two things is razor thin, and it's defined completely by the discipline and the actions of the person making the trades.
Because at the end of the day, that's the real secret. A master trader doesn't actually know what's going to happen next. But what they do know is exactly what they will do if the price goes up, if it goes down, or if it just goes sideways. The real art isn't in predicting the future, it's in being prepared for anything.